So today we're going to be talking about pensions and how badass Esquire Group is. Pension plans, when most people think of pension plans, they think of a tax-deferred pension plan, right? Like they work in America. So, whatever you contribute to it isn't taxed as salary. It's basically excluded from the salary that you pay tax on. Your employer contributes money to that pension plan. You also don't pay tax on that. Whatever income is generated within the plan is also not taxed to you, right? So basically the money you put into the plan is not taxed, the money your employer puts into the plan isn't taxed, and the money being generated within the plan isn't taxed until, of course, you start pulling the money out, at which point you pay tax. And a lot of Americans are really surprised to learn when they move overseas and start working for a foreign employer that the foreign pension plan is not treated the same way as the US pension plan. The reason being is the whole reason that the US pension plans have these tax advantages is because they were designed specifically to comply with the US's laws governing pension plans, and by doing that you get sort of this tax exempt status and these tax advantages. Well, foreign pension plans generally are not set up with Americans in mind, right? They're set up with the residents of the country where the pension plan is in mind. So, for example, if you have an Austrian pension plan in Austria, that pension plan was set up to comply with Austrian pension laws and give Austrian residents Austrian tax advantages, right? Like they're not even thinking about the US. This is very unfortunate for Americans living abroad because, as you all know, Americans pay tax based on citizenship. So even though they're living in another country, they still got to deal with the US tax system. And so many times the foreign pension plan that an American is part of is basically treated like a foreign brokerage account, and it doesn't have any sort of special status, right? And so that means that, just to give you an example, let's say we have a foreign employee, an American that's working for a foreign employer, part of a foreign pension plan, makes $100,000 a year, right? But they're not actually getting $100,000 a year because they're contributing $10,000 of their salary to this pension plan, so they're really only getting $90,000. And then the employer is also contributing 10% of the $100,000 to this pension plan. Well, this poor American is actually going to have to pay tax on $110,000 because they don't get any kind of deduction for the $10,000 they paid into the pension plan, and the $10,000 the employer paid into the pension plan also doesn't get any sort of tax advantages. So this poor American foreign pension plan member is being taxed on $110,000, but they're really only getting $90,000 right now, right? Because the rest is in the pension plan. Now, to make matters even worse, because this foreign pension plan doesn't have any sort of special status, whatever income is generated within that plan is also taxable to that U.S. member. So that means, every year if this plan's earning income like dividends, interest, capital gains, stuff like that, this American foreign pension plan member is going to need to include that in his income and pay taxes on it, even though he's not getting it. It's not a great situation. Now, to make matters even worse, foreign pension plans are usually invested in a bunch of foreign mutual funds. Foreign mutual funds are considered passive foreign investment companies for U.S. tax purposes, PFICs for short. And PFICs are subject to a really draconian tax regime in the U.S. whereby the gains and certain distributions from PFICs are taxed so severely that it oftentimes completely wipes out any gain that you would have realized on this. So foreign pensions have the potential to really be a burden rather than a blessing for Americans who participate in foreign pension plans. We were recently approached, and this is where our badassery comes in, and I'm going to go ahead and give a shout out now to attorney Virginia Yecker, who helped us figure this out because she's a badass too. Anyway, here we go. So we were recently approached by a foreign pension plan that was set up not with Americans in mind, but over the years has gained several American members. So they have a couple hundred, it's a company with a couple hundred American employees, and they're part of this foreign pension plan. And this foreign pension plan was wondering, how are these Americans supposed to be taxed on this? What's the U.S. tax treatment? And so they actually went and sought advice from a couple relatively big tax firms to try to figure this out. And these foreign tax firms, these U.S. international tax firms basically, looked at this. They didn't dig quite deep enough, and they basically said that this will be taxed in the manner that I just explained, right? So basically, there's no kind of tax deferral. The employee has to report, the income that they contributed. They have to pay tax on the income the employer contributed. They have to pay income or tax on the income generated within the plan, and they have to do all this PFIC reporting and all that other stuff on all the assets within the plan. And we were really hoping to find a better answer. And this is where it pays to have somebody on your team, on your international tax team, that really takes the time to dig deep and figure things out, because a lot of times there is a better answer. It just takes time and brain power to find it. And in this particular case, we found it. And what we were able to figure out was, okay, even though the foreign pension plan member would need to include in income the contributions that they made to the pension plan, as well as the contributions that were made by their employer, they didn't need to include the income that was going to be generated within the plan, nor did they need to do this PFIC reporting. And this was a huge advantage. This is a big win for those people, because having to calculate the income that was generated within the plan was a huge undertaking that would need to be done every year. And quite frankly, I don't know that the Americans that were part of this pension plan really would have been able to afford that. And furthermore, they didn't even know if they were going to be able to get the information from the pension plan. The pension plan themselves didn't have the software to kind of figure out what the Americans needed to know. So this was a nightmare. So by digging deep, using our brain power, with the help of Virginia Yecker, we figured this out and gave them a really good answer. So the moral of the story is, if you're an American living abroad, don't assume that the foreign pension plan that you're part of is, tax deferred or otherwise somehow tax advantaged for U.S. tax purposes. It's probably not. And secondly, you need to figure out exactly how it's taxed and how it's treated from a U.S. perspective. And a lot of times, people in the tax profession don't take the time to dig deep. They just apply, this is how it's normally treated, so it's how they're all treated. Or they just don't have the expertise. But it's important to hire somebody that does, because a lot of times there is a better answer. If you have a foreign pension, you need help figuring out how it's taxed, or you need help reporting it, give us a call. We can help. You can reach us at esquiregroup.com or shoot us an email at info@esquiregroup.com. Peace.